Good evening. My name is Charles Allen. I'm the CEO of BTCS Inc. We are a blockchain technology company. Before we get started, if you just take a moment to look at the safe harbor statement on slide 2. So what I'd like to do is just go through our investment highlights, the industry, what our business is doing, our tool site, which we recently announced, and some of our broader initiatives. So BTCS, we are an early mover in the blockchain and digital currency ecosystems, and we're the first pure play public company focused on Bitcoin and blockchain technologies. Blockchain technologies are basically a decentralized general ledger database that allows for the transfer of Bitcoins from one person to another, as well as tremendous opportunities for disruptive applications to be built on top of that. What we do is secure Bitcoin's blockchain through our transaction verification services business and are rapidly scaling that business. Moving along to the industry, I give you just a little bit of background on what the blockchain is, but it's basically a decentralized public ledger, and that's something that we haven't seen yet in this day and age that now exists, where you can basically keep a record of who owns what, which is effectively what money is, in a decentralized way without a bank being the trusted third party. Moving on to slide 7, there's a tremendous amount of applications that can be built on top of Bitcoin's blockchain. There's also a huge movement to build other private blockchains. So just going through a couple of these, digital currency is just one use case for Bitcoin's blockchain, and that could be anything from accessing certain corridors in the remittance market, to micro payments, microfinance, peer-to-peer lending. There's a lot that can be done beyond that, such as other record-keeping tasks, other smart contracts such as escrow. So the possibilities of solutions that can be built on Bitcoin's blockchain is quite extensive, and we basically secure Bitcoin's blockchain. So Bitcoin right now is the most prominent use case for its blockchain, and if you just think about the traits of money, all Bitcoin really is a record-keeping mechanism, or the blockchain is a record-keeping mechanism, and a Bitcoin is just representative, effectively, think about it as a line item in a database, which is the same thing as the barter system or gold and silver or fiat, meaning gold is just a representation of money and who owns what. Same as fiat currency, right? The U.S. dollar is no longer backed by gold. It has money. It has value because people believe it has value, just like gold and silver. There's not necessarily a practical application for it. What's interesting about Bitcoin is a currency use case is it solves a lot of problems that haven't been solved in the past. The main challenge, though, for Bitcoin is it's not as widely accepted, but for something just over 5 years old, it's gotten quite a decent amount of traction. So why does that matter? A great use case, this is slide 9, is if you look at what's going on in Greece and other currencies where the local currency is very volatile, a decentralized currency or store of value is a very good alternative. And recently, the CFTC has stated that Bitcoin is effectively a commodity, except unlike other commodities like gold, it's hard to you don't really move gold around the world. You move a representation of gold. Bitcoin is digital in itself. It's just effectively a line item in a decentralized database, and so it provides a very unique use case for certain countries where their currency isn't strong. And that's something that hasn't really developed too much at this phase, but we anticipate that the demand will increase over time. Just looking at slide 10, understanding kind of where it is from an acceptance standpoint, in terms of the money supply below Brunei and above Guinea. So almost $3.5 billion money supply is not bad for something over 5 years old, and a tremendous amount of retailers accept it. There's been, moving on to slide 11, tremendous growth, despite the price of Bitcoin, which is actually in the last few months stabilized in the $230 range and recently moved up to the $240 range. But there's been tremendous growth in terms of the trading volume, the number of transactions on the blockchain, and more importantly, companies that are building distributed applications on top of Bitcoin's blockchain. Slide 12 just has a good summary of the venture capital, money flowing into startup companies that are focused on Bitcoin and blockchain technologies. To date, there's been a tremendous amount over, for 2015, we're expecting, just under, $1 billion to be invested. So that brings us to slide 13. What does BTCS do? So our core focus right now is to secure the blockchain through our transaction verification services business. It's also sometimes referred to as mining. And that basically means that we effectively touch, any transaction that's built on top of, that involves Bitcoin or applications that are built on top of Bitcoin's blockchain. So if you look at how we started our business, we initially were an e-commerce company, and then we expanded into other areas within the digital currency ecosystem by investing in a few different companies. And now we've moved on to what we look at as the cash cow, securing Bitcoin's blockchain. So when we secure the blockchain, basically what we do is we verify transactions. So to kind of put this into English for those that aren't familiar with Bitcoin and how it works, if you want to send a Bitcoin from, in this case, in this example, this is slide 15, from Bob to Kate, it's basically a free transaction right now. There's a limited fee. So I could be one of the market participants that verifies that transaction, and instead of being rewarded a processing fee like a credit card would do, I'm rewarded by the network in the form of newly issued Bitcoins. That's my reward. Over time, the reward in the form of newly issued Bitcoins will decrease, and the transaction fees will increase. So the concept which was built into the design of the system was that if you want to drive adoption, you don't charge people for a service. You provide you provide it for free, let it get to scale, and then add a transaction fee when it's at scale and it can support that fee. So that's the role we play. We entered into, and this is slide 16, we entered into the market at the end of last year. We saw something very unique in that the price of Bitcoin had effectively skyrocketed to almost $1,200 a Bitcoin, and we kind of viewed that, having invested in the space, as an unsustainable level, and we assumed it would likely come down, as a lot of these companies and applications that are being built are still in their infancy. At the same time, the difficulty, and just think about that as a measure of how hard it is to earn newly issued Bitcoin for providing transaction verification services, had effectively skyrocketed. And so we decided it was not an opportune time to enter that market. And at the end of last year, what we realized is the price of Bitcoin had stabilized, and the rate at which the difficulty, and I don't want to get into too much detail on how that works, but the rate at which the difficulty was increasing had effectively plateaued or was growing at a more gradual basis. So you can see here, in what we call the high risk volatility range, the difficulty was growing at about 25% per month, whereas now it's about 4% per month. And we believe you can build a long-term business by securing Bitcoin's blockchain when you have a more reasonable difficulty increase as well as a more stabilized Bitcoin price. So that was kind of our entry point. We have right now an 83,000 square foot facility in North Carolina, which is a low power cost region. And on slide 17, one of the things that's interesting is there's effectively an operational hedge. So while we are, our revenue can go down, as the price of Bitcoin declines, we expect less efficient operators to come offline, which means our share of the pie should theoretically increase, and we estimate or anticipate that would result in kind of stabilized revenue. Obviously, if everyone gets to a point of the same efficiency, this operational hedge may not work as well. Slide 18. This really gives a great snapshot into our growth. So since entering this market at the end of 2014, in the end of 2014, we earned 52 Bitcoins. Year to date, we've earned about 1,300, 2,481% growth. For Q3, we earned 683 Bitcoins. which was up 24% from what we did in Q2 this year. And just put that in perspective, in Q2 we did about, ballpark about 150,000 in revenue. What's most interesting though is we've grown the capacity in our North Carolina facility drastically. So we've expanded our capacity in Q2 to now 3 megawatts of available power, and we believe that 3 megawatts of available power should be able to allow us to deploy 20,000 terahash of Spondoolies SP50s. Right now we're running, just under 1 petahash, or 891, and on that we generated 683 bitcoins in Q3. And so, if you look at the potential, if we're successfully able to deploy, Spondoolies SP50 servers in our North Carolina facility, we, anticipate, tremendous growth. So slide 19 is a picture of our facility, and slide 20, and this is what really gets me excited, is we've in April this year we signed an LOI to merge with Spondoolies. Towards the end of September, we signed definitive agreements to merge, which took about 3 or 4 months of negotiation. And Spondoolies has just announced their new product, the SP50, which is anticipated to be 4 times more efficient than their previous product. And as a next phase, our goal would be to finish building the SP50 and launch it in our North Carolina facility. So moving on to slide 21. The market for companies that do what we do has effectively consolidated into a few large players. The largest, being Bitmain, Bitfury, 21 Inc, and KNC Miner, and they all have their models are to design, build, and deploy servers. And with the merger with Spondoolies, we will be in basically the same position of designing, building, and deploying the ASIC servers in our North Carolina facility. So the pieces to make that happen, we've put in place, and we're very excited to, take that to the next level. Slide 22 should give you an idea of the design specs of the SP50. We've decided to move away from a, kind of home unit where it's just a small little server that you plug in your basement to basically an industrial size, almost like blade server where you can slide out the boards and put in new boards as more efficient designs come out. So you can get a sense of the picture of what's been designed, some of the analytics on the heat disbursement, and then moving along to slide 23. BTCS right now we're let's call it about a 22 to $24 million market cap depending on the price. The terms of the merger would allow BTCS to have about 54 to 55% of the merged company, and Spondoolies did 28 million in revenue in 2014, and we believe in 2016, if we're able to successfully execute our business plan and fully integrate, so we build a vertically integrated business versus just selling the product, we will be in a very strong position. So compared to there's only 2 other public comps in the space right now, Digital BTC and Vigogo. I think, when you look at our kind of value proposition, if we're able to successfully build this business, it's quite interesting at these levels. Moving along to slide 24, we have a great management team, and I think we have the right people in place, especially with the Spondoolies merger, to really take this company to the next level. Slide 25. So we recently launched our tools site on our website, which you can find at btcs.com, and click on the tools. And the purpose of this was threefold. First off, the Explorer tracks all of the transactions on the blockchain, so we wanted to offer a solution to allow interested parties the ability to see the transactions on the blockchain and track the Bitcoin's blockchain. Moving along to slide 27, this was very important for us to launch. It was we saw a void in the market for a solution that helped educate and teach people how the transaction verification services business works. So we created a simulator where interested parties, whether that's potential customers of Spondoolies, as well as interested parties that want to understand how our business works, we created this simulator to kind of break it down into a more understandable fashion. So I'll just walk through the different components of this. And the first section is the upper left box, which is the the network inputs. So the difficulty will automatically pull from the network, and then you can adjust with the slider what you expect the monthly difficulty to be. Right now, it defaults to the trailing 2-month average, and then you can set the Bitcoin price at what you believe it'll be. Right now, it just pulls from the market price, but you can move that around. You can also look at what you think Bitcoin appreciation will be. The next kind of key sets of inputs are, this is under the investment and operational inputs. Are you buying new equipment or old equipment? If you're buying new equipment or deploying new equipment, you would add that to the network, and that way this simulator will take into account the increase in network capacity. The investment amount is how much you're investing. So in this example, I think it's 2.4 million. And this is probably the most interesting, the investment amount, the operating cost, and this is per kilowatt hour in electricity. This is basically what you pay in electricity. You can move this around, and that'll affect your profit margin. And then the server cost, this is basically what you're paying per terahash or per performance. And lastly, what's the performance of the equipment? So right now we have it default to the SP50, which is 0.15 joules per gigahash. So when you think about our model, there are basically a few inputs for what drives revenue in the transaction verification services business, and that is the price of Bitcoin and the difficulty increase and how much capacity you're running. And then there's a couple factors that determine your cost, and that is effectively your operating cost in terms of electricity, as well as your efficiency. So if you put these inputs in, this model will basically spit out what your IRR is, as well as what your profit after paying for equipment and hosting costs, if you purchase the equipment as well as what you pay per month for electricity. The simulator results section shows what that would look like if you were to put that on an income statement. This model is basically based on the premise that you buy, let's say, one machine or however many machines you want, deploy them, and you never do any additional R&D or reinvest proceeds. It's kind of, you buy a piece of equipment and you let it run. The bottom chart, the accumulated operating profit, and this is kind of interesting. It's shown on a monthly basis, so you can see each month it'll show you what the accumulated operating profit is, and once it moves from red to black, it means all of that is profit. Whereas when you were initially just covering your cost in the beginning. On the right side, you can see our sensitivity analysis. So we basically looked at this model, the IRR, and wanted to understand built it so the interested parties could look at this and say, well, what happens to the price of Bitcoin? What does that do to the IRR on this equipment if I bought it and deployed it with the operational inputs? And you can see how it's affected by the price of Bitcoin as well as your operating cost in terms of electricity. You can also see the same, at the difficulty at the operating cost you've selected. You can see what happens on the lower chart to the IRR based on the Bitcoin price and expected monthly difficulty increase. So this website was really designed to fill a void in the market and help consumers, potential consumers of Spondoolies, as well as other interested parties, understand how our business and how we look at it. Moving along to slide 28, this is quite just a simple calculator we launched, and this is really for people in the business that want to understand how money is made in a much more simplified fashion, not forecasting out every month with difficulty, but just understanding if you ran in this example how it's set 20 petahash or 20,000 terahash at the current difficulty and the current price of US dollars, what does that mean? And in this example, it means you would earn 169 Bitcoin per day, just over 1,000 per week, and over 5,000 per month. And then you can see that in the equivalent price of US dollars, right? At a $240 Bitcoin, that would equate to $1.2 million a month. And if you're adding capacity to the network versus buying used equipment, you would just change the add capacity network from no to yes. So again, this was kind of a simplified tool that we launched to help fill a void in the market for people that are interested in the business. And that basically wraps up the outline of our tools website. So moving along to slide 29, we have some broader initiatives and we've basically been looking at this in terms of making strategic investments in some key companies within the space. And some of those are outlined here on slide 31, such as GoCoin, Gem, they have a wallet solution, etc. And moving along to slide 32, I believe we have a great growth strategy and path forward. The first key for us is to vertically integrate through the merger with Spondoolies, deploy the SP50 in our North Carolina facility, and then look at other low-cost data centers to expand our transaction verification services business. And what's very interesting to me is to evaluate and build other additional consumer solutions that leverage blockchain technology. We're also keenly focused on uplisting to the NASDAQ when we meet the initial listing requirements. So that is a core priority of the company. And that basically summarizes it. Slide 33. So we're we're the first U.S. publicly listed company focused on Bitcoin and blockchain technologies, and I think we have a great growth strategy going forward and a tremendous opportunity ahead of us. So at this point, I'd like to open it up to any questions that investors may have.
Okay, we're now ready to open the line for our Q&A session for BTCS. Charles Allen, CEO, is with us. Welcome, Charles.
Thank you for having me.
And our first question, is the company doing any R&D on potential technologies related to the blockchain?
Are we doing any R&D to potential technologies? Right now, through our pending merger with Spondoolies, we have a tremendous amount of IP on the Spondoolies side focused around securing Bitcoin's blockchain, and we are evaluating other solutions that we can potentially build on top of Bitcoin's blockchain. But right now, the core focus is our transaction verification services business, and we do have a tremendous amount of IP as a combined company around that.
Very good. Thank you, Charles. Our next question, how do difficulty increases affect your transaction verification services business?
That's a good question. I mean, basically, there are a few factors that make you competitive in this business. The first is the monthly difficulty increase, and the second is the price of Bitcoin. Those two factors dictate the revenue side of the equation, and the kind of cost of goods sold is dictated primarily by your operating cost, electricity, and your facility, as well as your efficiency of equipment. So we're planning for to be profitable at very high levels of difficulty increases. With the Spondoolies SP50, what they've designed for, we believe we can hold about 20 petahash in our North Carolina facility, and the numbers we'll know exactly for sure when they come out of when we're able to get those, if we're able to successfully get those down the production line and installed in North Carolina, it would cost us approximately, at today's difficulty, about $25 to make a Bitcoin with our current cost of electricity running those servers. So we have, I believe our company as a combined entity would be very competitive from a technology standpoint, and we're also competitive from an operational standpoint with the other players in the market. So we can, as the difficulty increases, the margins will get a little bit tighter. But if it only costs us $25 a Bitcoin, today's difficulty, if we can successfully deploy this equipment, it's not a major concern.
Okay, thank you, Charles. And our next question, how will Spondoolies' new technology affect the efficiency of your transaction verification business?
The Spondoolies recently announced the SP50, and it is much more efficient than anything else currently on the market that consumers can buy. Our main competitors, Bitmain, for instance, their S7 is another server. It's more of a home unit. It is very efficient. It's 0.25 joules per gigahash. The SP50 is designed to be 0.15 joules per gigahash, and that's on a 28 nanometer technology. Another company out of China on a 14 nanometer technology announced that they're doing, it's around 0.25 joules per gigahash. The lower number, the better. Bitfury is doing quite well. They're one of our competitors as well. So I think we will be extremely competitive. We've also, Spondoolies has also designed the new server to be like a blade server where you can slide out the boards, therefore reducing the future costs in the future. As it's a blade server, you don't need to replace the whole unit every time you upgrade. You can just simply slide out the board and insert one with newer, faster chips.
Very good. Thank you, Charles. And you briefly mentioned some competition in the last answer there. Can you go over a little bit of what the competitive landscape looks like in the transaction verification services business?
So right now there's basically 5 companies in the space, and between BTCS and Spondoolies as a merged entity, we would be one of those 5. And the reason I say there's really 5 is I look at our competition as companies that develop, build, and deploy the servers. There are a lot of companies that just run servers, but when I think about true competitive advantage, that comes from the intellectual property and actually designing and making the servers. For instance, someone that would buy servers from us does not have, in our view, a long-term competitive advantage because they don't own the technology unless they choose to get into that business themselves. And Bitfury, they still sell, but to my knowledge, they still sell their product, but not the general public. Bitmain still does, but based on the price they're selling it, it's a profitable business to be in if you buy their equipment, if you have very low cost electricity such as us. But many of the other players that have higher cost electricity, it does not make sense. And if you design the equipment yourself, you capture the margin on that side of the business, which is very high, as well as you kind of streamline the revenue stream.
Thank you, Charles. And our next question, are you planning to expand your transaction verification business beyond your North Carolina facility?
We are. We're looking at facilities in addition to that where we could diversify the risk from being just in one location, as well as expanding within North Carolina. So we're looking for basically the lowest cost operations we can find. North Carolina is a very cost-effective place to be. The electricity is low. The price of electricity is low, and we have an amazing deal on the building and the facility. So we had a very low build-up cost. But we're also looking at other places such as Washington State and Canada, where there is competitive electricity prices as well.
Very good, thank you. And we have just about 2 minutes left. With the remaining time, you covered a lot of great information on here. What's the main takeaway investors should have about the BTCS story?
Well, I think the value proposition for us here is, the potential for, tremendous revenue growth. We've put a lot of the pieces together in the last 9 months to make us a strong company. We raised $2.3 million in April this year. $1.5 million we invested into Spondoolies, and they've used that to continue to develop the SP50. We used, what we didn't invest in Spondoolies to build out our North Carolina facility to get it to 3 megawatts. So now, the next phase of our company is to manufacture the SP50 and deploy it in our North Carolina facility. And if we're successfully able to do that, the way this business works, if we can basically plug those servers in, you can go see a video of the facility on our YouTube channel, they start printing Bitcoins. And based on the specifications that the SP50 is designed at, it would cost us at today's difficulty about $25 to make a Bitcoin. Obviously, the difficulty may go up, so it could be slightly higher by the time we're able to deploy those. But even if it's $30 or $35, the price of Bitcoin is now, up almost 25% for the month at, hovering around the 270 to 280 range. So, trading volumes are up. There's been a tremendous amount of positive news in the sector. The EU just said that Bitcoin's exempt from value add tax, and there's been a whole host of other good news in the industry. So we think it's there's a lot of upside in Bitcoin, but also for our business, we're effectively minting Bitcoins or verifying transactions on the blockchain. We think there's a lot of upside potential if we're successfully able to deploy these servers and really just plug them in. So that's what I would look for. Moreover, just looking at our growth, year to date, we've grown. I can't put out the Q3 revenue, but we did announce the number of Bitcoins we earned, and we're up 24% quarter over quarter from Q2. So we're definitely growing the business, and I think that shows in the numbers.
Yes, absolutely. Very good, Charles. And we've reached our allotted time. For our viewers, we're just talking to Charles Allen, CEO of BTCS.